What's going on, everybody? It is April 8th, 2024, and we just saw something amazing today, actually. This, what is it? A solar eclipse. And that thing was phenomenal. If you didn't see it, totally recommend you go on YouTube. I learned a lot today, and it was kind of a reminder of how beautiful nature really is and how not in control we are of what exactly happens. So that was fantastic. Really happy I got to saw that. It was my first time in my life. Apparently, the next one is in 20 years. So check us back in 20 years and let's see what's going on. So now we are on Mastermind number 78. My name is Hanif Brown. Happy to be here with you all today. Thanks for those who are joining us here via Zoom, Facebook, or if you're watching this on YouTube, what's going on? Big up on yourself. You don't know. It's not so cold outside today. It's warmer than usual for where we are in Canada here. And another day, another week, and we're happy to be growing, happy to be going on another level. So, as you can see here on my screen, this is Rich Dad Poor Dad and Mastermind meetup number 78. Let's see what we have on our agenda here for today. Let me share my screen right here. And let's see, start from the beginning. So, today we have on our agenda. Da, da, da. So we're still on getting started in Rich Dad Poor Dad, chapter 7. We're about to finish chapter 7 actually. Then in real estate, we're going to be going over transfer tax in real estate. What exactly is it? We're going to cover some news as well. And in the cryptocurrency market, we're going to be talking about understanding how to take profit and going over news. So we have some personal development, investing, real estate, crypto, and let's go. So as a disclaimer, the content here is for informational purposes only. You should not construe any such information or the material as legal, tax, investment, financial, or other advice. I'm not a licensed financial advisor, not a CPA, and definitely not a lawyer. Please consult a licensed professional before making any decision. There are risks associated with investing in securities. Investing in stocks, bonds, exchange-traded funds, mutual funds, and money market funds involves risk of lost people. So I'm not the one that's, I'm not a licensed financial advisor. I'm not the one responsible for whatever it is that you're looking at doing. How exactly did this meeting come about? A couple of years ago, I decided to take my life on another level, and I'm living what exactly I would say my dream life is right now. But that took effort, really, and big impact. Something that had a really big impact on that was this book, Think and Grow Rich. And you'll see here on this page, it talks about what exactly is a mastermind and the power of that mastermind. And that's what this here is talking about, and how people have successfully executed different masterminds to achieve different goals. You'll have your own mastermind. And if you don't have one, feel free to reach out, and you may be a good fit for what we may be doing here, as it's not exactly for everyone. So let's jump right into it. We're going to start with Rich Dad, Poor Dad. And we've been going over some great stuff here from Robert Kiyosaki. Now, what the rich teach their kids about money that the poor and the middle class do not. So let's see what it is that we have going on here. So we are on almost the last chapter, which is on getting started. So we started out by going over how the rich do not work for money, why teach financial literacy, minding your own business, the history of taxes and the power of corporations, how the rich invent money. You might be looking at this and saying, they didn't teach me this in school. And you're right, they didn't teach you this in school. Self-education is exactly what this is, and it's a matter of you learning more about your finances, working to learn and not working for money, overcoming obstacles, and now we are on getting started. So let's jump right there. So we've gone over different parts of getting started, talked about paying your brokers well and the power of good advice, be an Indian giver and the power of getting something for nothing. So that's where it is that we are. So let's jump right into it. When the first European settlers came to America, they were taken aback by a cultural practice some American Indians had. For example, if a settler was cold, the Indian would give the person a blanket. Mistaking it for a gift, the settler was often offended when the Indian asked for it back. The Indians also got upset when they realized the settlers did not want to give it back. That's where the term Indian giver came from, a simple cultural misunderstanding. In the world of the asset column, being an Indian giver is vital to wealth. The sophisticated investor's first question is, how fast do I get my money back? They also want to know what they got for free. also called a piece of the action. That's why the ROI, or return on investment, is important. For example, I found a small condominium that was in foreclosure a few blocks from where I live. The bank wanted 60,000 and I submitted a bid for 50,000, which they took simply because along with my bid was a cashier's check for $50,000. They realized I was serious. Most investors would say, aren't you tying up a lot of cash? Would it not be better to get a loan on it? The answer is not in this case. My investment company uses this condominium as a vacation rental in the winter months when the snowbirds come to Arizona. It rents for $2,500 a month for 4 months out of the year. For rental during the off season, it rents for only $1,000 a month. I had my money back in about 3 years. Now I own the asset, which pumps money out for me, month in and month out. The same is done with stocks. Frequently, my broker calls and recommends I move a sizable amount of money into the stock of a company that he feels is just about to make a move that will add value to the stock, like announcing a new product. I'll move my money in for a week or to a month while the stock moves up. Then I pull my initial dollar amount out and stop worrying about the fluctuations of the market because my initial money is back and ready to work on another asset. So my money goes in and then it comes out, and I own an asset that was technically free. True, I've lost money on many occasions, but I only play with money I can afford to lose. I would say on an average of 10 investments, I hit home runs on two or three, while five or six do nothing, and I lose on two or three. But I limit my losses to only the money I have in at that time. People who hate risk put their money in the bank. In the long run, safe savings are better than no savings. But it takes a long time to get your money back. And in most cases, you don't get anything for free with it. On every one of my investments, there must be an upside. Something for free, like a condominium, a mini storage, a piece of free land, a house, stock shares, or an office building. And there must be a limited risk or a low risk idea. There are books devoted entirely to this subject, so I'll not talk about it here. Ray Kroc of McDonald's fame sold hamburger franchises, not because he loved hamburgers, but because he wanted the real estate under the franchise for free. So wise investors must look at more than ROI. That's return on investment. They look at the assets they get for free once they get their money back. That is financial intelligence. And we'll pause there for now. And next week we'll go into part 8, use assets to buy luxuries and the power of focus. So what exactly is Kiyosaki talking about here? All right, when he talks about be an Indian giver, and he relates this to when it is that the first European settlers came to America and they were taken aback by a cultural practice some American Indians had. So Europeans came to America, and then they what they would call the Indians in terms of the original people that were in America, a practice that they had. So, for example, if a settler was cold, so they're talking about the practice of the Indians here. The Indian would give the person a blanket. So you're cold, okay, here's a blanket. So mistaking it for a gift, the settler was often offended when the Indian asked for it back. So they thought that they were giving it to them as a gift, but the Indians asked for it back. The Indians also got upset when they realized the settlers didn't want to give it back. So they actually got upset at that. That's where the term Indian giver came from, a simple cultural misunderstanding. So Kiyosaki is relating this now to where it is that he goes into his own investment portfolio. So the Indian gave something to the European, and the European was keeping it, but the Indian said, no, I want it back. And you can relate this to investing as to where you put your money into something. Don't you want it back? Don't you want back your initial investment? And that's kind of what Kiyosaki is going ahead and relating this to, as to how fast does he get his money back. So the Indians don't give the Europeans this item to keep. No, we give it to you because it's cold and you want to be warm. So here's the item, you utilize it, now give it back. And similar thing with investing, right? If you're looking at having money make money for you, you want to look at how sophisticated investors look at things in terms of how fast do I get my money back. And that's your initial investment. And then he used this example of how he bought a condo, was in foreclosure personally, struggling to pay the mortgage, and it was in his area. So first, a couple of different lessons there. He understood what was going on there. He knew exactly how to find foreclosures. If you yourself are looking at investing and you're only looking at realtor.ca, you're not exactly finding all those great deals. You need to see where it is that you can help people. People struggle with their finances, right? Some people can't pay their mortgage and they may need help. And that ends up being an opportunity for you. So the bank wanted $60,000 for it, and he submitted a bid below what they were asking. So that's below what exactly the bank wanted, $10,000 below. But here's the difference. And they took it. Why? Because with his bid was a $50,000 cashier's check. So that indicated to the bank that he was serious. Here's the money, I have it. I'm serious about getting this. But Kiyosaki did his numbers before he realized that he had a plan for it. And he talks about this plan here, where in the winter months, he was able to rent that out for $2,500 for 4 months. So you have 2,500 times four. That's $10,000 per year. In 3 years, he would have $30,000 just from rentals in the winter months. And then during the regular months, it rented for $1,000 a month. So 1,000 times 8, that's 8,000. 3/8 is 24. So within a 3-year period, he had $54,000 gross. $54,000 gross. And so he talks about how exactly he got back that initial $50,000 within a 3-year period. So let's relate that $50,000 like the code to what he used to buy the condo. Went in, bought it, got the money back as soon as it is that was possible, which was within a 3-year period. Didn't want to finance it, and he had a plan and went ahead. Plan worked out great, and there it is. The same he does with stocks, right? Money is just a tool. There's an opportunity to make money with stocks because of this announcement. He puts the money in, after he makes the money, he gets it out. Some people want to keep the money in for a long time. For what? You don't need to, right? You want to get your initial investment back as soon as possible, right? As soon as possible, and not get greedy. So he's lost money on some occasions, but here are some of the lessons he shares here. But I only play with money I can afford to lose. A lot of different lessons here. Many people play with stuff that they're not willing to lose, right? Some savings is better than having no savings. So if you don't know what to do with it, keep on saving and get educated in the meantime until you know exactly what it is that you need to do. So on average, 10 investments, he hits home runs on 2 or 3. So even a third or less than a third of them. While 5 or 6 do nothing. 5 or 6 of them do absolutely nothing. And he loses on 2 or 3. So you probably are saying, but is this guy really making money? Like he's losing more? No, the things that he invested in terms of losing on hitting home runs on 2 or 3, those are some really big home runs, and so it makes up for whatever it is that he would have invested in terms of putting in what he was willing to lose. And great lesson there, and it's really really good that he shares that there with us. So people who hate risk put their money in the bank. In the long run, safe savings are better than no savings, right? So you're saving as opposed to in putting your money on some kind of depreciating asset. So, and every one of his investments, there must be some kind of upside, something for free. And if you don't know what that is, negotiate it, right? That's where the skill of negotiation comes in. You can likely get a lot more than what it is that you are looking at getting. And then he used the example of McDonald's, which is, you go to every corner in different parts of North America and other places. There is one. Ray Kroc of McDonald's fame sold hamburger franchises. He didn't love hamburgers. So key thing there, many people think they need to go into business just because they love something. You don't need to love it, but because he wanted the real estate under the franchise for free. And that's a whole other business model there that we can take apart and analyze and see why. McDonald's isn't the hamburger business, it's real estate, right? You look at where each of those is located, some prime piece of real estate. So wise investors must look at more than return on investment. So you can't just be looking at just one metric in terms of how you assess an investment. There are a lot of different things that you look at. Many people say, what do you think of, investing in this? Well, the truth is, when you're looking at something, what's the ROI? You can't just be only looking at that. They look at the assets they get for free once they get their money back. And that is financial intelligence. So some things to bear in mind as it is that we go about things on our investment journey. So, go ahead and key thing that he's sharing there and practical stuff that he actually did, right? So be an Indian giver and the power of getting something for nothing. So get your initial investment back as soon as possible as a sophisticated investor and getting something for nothing. That is and key thing. Get something for nothing. So there must be something different in terms of what it is that you're getting with what you're doing. So we will pause there for now in terms of Rich Dad, Poor Dad. And next week, we're going to continue with using assets to buy luxuries and the power of focus. So that's where we'll stop here for today with Rich Dad, Poor Dad. And let's jump right into real estate today. Let's look at real estate. So what exactly are we looking at? We're looking at what exactly is land transfer tax. And so what exactly is it? What should you know? Who pays it? How much do you pay? So frequently this comes up when, for example, I'm doing numbers on property, I'm doing analysis on properties. Land transfer tax comes in terms of the closing costs. So along with what I'm looking at in terms of rather my initial investment, I'll calculate it in that. So I'm paying for my appraise, getting the appraisal, getting, for example, an inspection, lawyer fees. I'm looking at land transfer tax as one of those things that I have to account for in terms of my initial investment. Obviously, the down payment, and the brokers that I'm going to be paying along the way to get different things. So what exactly are land transfer taxes? So land transfer taxes are collected by a province, municipality, or both, depending on where you live. Every province has some version of a land transfer tax, although it may go by a different name. Quebec levies a welcome tax, for instance, while Alberta and Saskatchewan charge a property registration fee. Land transfer taxes vary by region, and some municipalities charge considerably higher transfer fees than others. However, if you're a first-time home buyer, you may be eligible to get some or all your tax payment refunded. So this is the payment that you are making to your province or municipality when there's some transfer of property, right? So that's what it is. So if you are looking at acquiring a property from somebody else, you'll be paying land transfer tax. Well, you'll likely be paying land transfer tax. I say likely because, there's some situations, for example, as a first-time home buyer, that's a whole other different thing. In Canada, no matter the province or municipality, it's the buyer that pays the land transfer tax, not the seller. So the seller is not paying the land transfer tax. You, as the buyer, are paying the land transfer tax. They're due as soon as the buyer takes possession of the property. Unlike property taxes, land transfer taxes must be paid in full as a one-time payment. They should be factored into the funds you set aside for closing costs. So can you avoid land transfer taxes? And this part goes over a little bit more where you may be able to you're eligible for a partial or full refund of the land transfer taxes. So there are situations where land transfer tax can be avoided. For example, when you're purchasing a newly built home, there's really no transference there. Transferring the property to a lineal descendant, that's, for example, a parent to a child, transferring property between spouses, transferring a property from a person to a family business, transferring a farming property between family members. So how to calculate this land transfer tax now? Typically, they're calculated as a percentage of the property's estimated value, right? Which often resembles the purchase price. So that's the number that we'd be using. In many places, the percentage you'll pay is higher for more expensive homes, similar to income tax brackets that charge a higher tax rate in higher tiers of income. For example, in Ontario, that costs $500,000. A property that costs $500,000 you'd pay for example, 0.5% on the first 55,000, 1% on the next 195,000, 1.5% on the next 150,000. And actually, let me use this. So this calculator, at wawa.ca, and this is in Canada. In the US, it's going to be a little bit different. So let's use an example. This here calculates the land transfer tax there for you. So let's see here. So NB land transfer tax, so you can do that with, for example, any province. So if the purchase price of the building is, for example, $750,000, and you put in calculate, it will calculate your land transfer tax at $7,500 because in New Brunswick, 1% of the property's purchase price is your land transfer tax. And so that's what it is that you would be looking at paying. So if you go somewhere else, you'd be looking at paying something different, right? So, and then it goes over here, comparison of New Brunswick land transfer taxes with other provinces on a property that's $500,000, for example. You'll see there what exactly that looks like. In Nova Scotia, it's the highest. In PEI, oops, that's what we'd be looking at. And so it depends on where you're purchasing property, what exactly that rate there is. So let me scroll back down here. And so you always want to account for that. So it's not some crazy amount, right? Near 1% on the property is not too crazy. So here, let's use another example of another province. Let's use Alberta. Alberta, what's the current home value? Let's say that we're looking at $1 million. We're buying an investment property, for example, an 8-unit building. If we're buying it for $1 million, whatever our mortgage value is, let's say we're doing 80% loan to value, 800,000. And then we go ahead and we estimated fees, $740 is what it is that one would be paying. And then BC, that's a whole different thing. So you get the gist of it as to what exactly this land transfer tax is. So that's what land transfer tax is. Let's look at a bit of the news. So Canada cut interest rates before US as labor market erodes. Labor market erodes, that's article there by BMO. So we're seeing where impact there in terms of interest rates and labor markets and what the relationship is there in terms of a big five bank looking at that. This week's top stories, let's look at that. Canadian real estate has never been less affordable and low rates don't help. Wow. So we're seeing a situation, according to Better Dwelling here, that buying a house in Canada really has never been harder, right? It's according to RBC, it's gonna take years to correct. So there's a housing affordability problem. People can't buy homes. We're likely going into what exactly one would describe as a renter's economy, because if people can't buy homes, they still need places to live. So a lot more people you'll find are going to be renting. So you want to, start owning. Canada added 58,000 workers, but lost 2,000 jobs last month. Canada's National Housing Agency forecasts a 20% jump for home prices. Really? That's CMHC is saying that. Wow. Higher home prices and slower building. Their existing home price forecast sees home prices rising a whopping 20% over the next 2 years. Wow. Based on tight demand. Well, that makes sense because there's an increase in demand and the supply is really, really slow because there are not a lot of new buildings being constructed. Canada population sees record growth, mostly temporary residents. 2023 was a record year for Canada in terms of population growth, mostly through temporary residents. And temporary residents are typically defined as people who, for example, come here to work. Not on work permits, but temporary foreign workers, for example, one or two people who come here on a study permit, one would look at and say, lower rates do not improve housing affordability, according to the US Federal Reserve. So we're looking at making rates lower. Does that really make things a lot more affordable? Stuff in terms of Toronto real estate. Toronto real estate prices surged despite fewest sales since 2009. So what are we seeing here in terms of news? We're seeing a bit of analysis here in terms of Canadian real estate being less affordable. So there's an affordability crisis, and even lowering rates, they're saying isn't going to help. Canada adding a lot more, adding 58,000 workers, but losing jobs. For example, last month. So there's an impact there in terms of, so there's the labor market, housing affordability, right? Impact in terms of rates and how that impacts the affordability of housing. We're also seeing where forecasts in terms of CMHC saying that they're expecting a 20% jump for home prices over the next 2 years. A study from the US Federal Reserve saying that lower rates do not improve housing affordability. So we're seeing different themes here. Housing affordability, lowering rates isn't gonna help it, is according to what it is that this study here is saying. Prices are increasing still, right? This is real estate. I mean, normal that happens, over a longer period of time. And so we're seeing different themes here. Not looking really great. Are we transitioning into a rental economy? It has been one of the topics that's been talked about a lot. And that seems to be the case because there's not a lot of new housing being built, one. And two, there's the affordability problem. And there's so many more factors that we have to really look at there. So that's there for Canadian real estate. And typically, you'll find the US to be a similar situation. Not exactly, but the two economies are they're related in this kind of way. So that's that for the real estate market there. Are there still opportunities? Yes, there are still opportunities. It's all a matter of you understanding how to identify those opportunities. If you don't know exactly how to do that in real estate, feel free to reach out and we're happy to help you in terms of doing that. So that's what we're looking at there in real estate. So let's jump over to the market now. That's the complete flip side in terms of risk and volatility. Let's see. So let's go to the cryptocurrency markets. And what are we doing here? So we're talking about taking profit actually in the cryptocurrency market. So what is take profit in crypto? A take profit order is an act of selling cryptocurrency to secure profits. It's usually executed at a predetermined price when the trade is in profit. Taking profits requires fairly active participation in the markets and is different from the HODL strategy, which requires the trader to keep passively investing in their assets. So we'll go over a little bit more of that. Overall in the cryptocurrency market, what are we seeing? We're seeing today where there's $2.69 trillion in the market, 2.4 million cryptocurrencies, 739 different exchanges of this amount of money, the $2.6 trillion. 52% is in Bitcoin, 16% is in Ethereum, and we're seeing we're on our in 10 days, so in a week and a half roughly, is the Bitcoin halving. And what exactly does that mean? You'll have to sit down and read more about it. I can't tell you about it in, like 20 seconds, but simply put, the supply of Bitcoin is going to be decreased. The halving expected to take place in April 2024, 10 days, 20 hours, 37 minutes, and 13 seconds. Blocks until halving approximate block time, 9.55 minutes. This might seem like mumbo jumbo to you, but to somebody like myself, I'll understand it. So you'll have to sit down and understand what exactly that is. Here's the fear and greed index. A lot more people are greedy. We're at 76. And so what exactly does that mean? People are feeling bullish with regards to crypto. If we were down here and we're at, 20 or 30%, people are fearful. and you'll find that we're likely in what exactly is a bear market, but we're more in a bull market now. The halving is coming up. Institutions are putting in money in crypto, and so that's probably causing a lot of the positive sentiment there. Over the last 7 days, what are we seeing? Bitcoin current price 71,729, up 2% over the last 7 days. Ethereum is up 5% over the last 7 days. Let's see which other big winners and losers that we have. Solana down 6% last 7 days. Toncoin is up 19% over the last 7 days. That's our biggest winner there so far, we're seeing. Near Protocol up 9%. Ethereum Classic up 8%. Mantle is up 17%. And Monero Privacy Coin is up 9%. Core is up down 32%. Core absolutely blasted into the top 50. Yeah, I'm pretty sure it's probably like dropped. It was maybe in top 50 last week. So big drop, 32%. It was up last week actually. Sui is down 12%. So we have some winners and losers mixture in terms of the cryptocurrency market. Jupiter is down 12%. Speaking of Jupiter, watching this eclipse today, and this guy was looking through a telescope. He was saying that he was actually seeing Jupiter. That was really cool. BitGet token is up 25%. Ethena is up 89%. That's new. That's something that's broken into the top 100 over the past couple of days. Wormhole, like what kind of name is this? This stuff just has some crazy names. Like, what kind of name is this? Wormhole. Ordinals, Bitcoin Ordinals up 17%. Pendle up 17%. Flare up 12. eCash up 13. Nervous Network, CKB, is up 73%. Okay, that means I need to sell. Neo is up 35%. Chiliz is up 14%. EOS is up 6. So Nervous Network and Ethena are our bigger winners so far. Some crazy percentages. And again, people, it's not hard to make money in crypto. If you're confused about what to buy, play it safe and just buy stuff that's in maybe the top 200, right? Top 20 if you want to, play it really, really safe and just hold on to them long term. That's be a hodler, right? Gnosis is up 10%. 19% is up. What is that? Oh yeah, Echelon Prime is up 19%. Aster is up 7. Outlayer is up 12. Terra Luna is down 11. Mantra is up 14. Economy is up 10%. Quantum is up 12%. Arkham is down 8. MX token is up 10%. Lots of people using that exchange there. And down 7% is YGG, Yield Guild Games. SafePal is up 19%. And that's what we're seeing. Cat, look at this thing. This thing is down 26%. Cat in a dog's world. What is this? This thing is a joke, I swear. Down 26%. This is definitely some stupid meme coin. I've never, and look at it. The supply 88888. That's crazy actually. Interesting numbers. So we'll go over a little bit more of that. So our big winners are Ethena and Nervous Network, CKB. And so what exactly is this take profit? Simply put, if you look at the Bitcoin all-time chart, just as an example, if you realize you've put money into something, like let's say you put $100 into Bitcoin, right? Over a couple years ago. Let's say you bought Bitcoin at 10,000 and now it's at 30,000. I mean, sure, you could wait until it goes up even more, but you've put in 10,000 You've made back your initial investment when the price went to 20,000. Why be greedy? Take out 10,000 and leave the rest in. And that's what we're talking about for terminology of the week in terms of taking profit in crypto. So that's selling your cryptocurrency to secure profits. You've made profits. You don't know what's guaranteed for the future. It's usually executed at a predetermined price. And that's why you always want to have a plan. Don't just buy assets. When you go into something, when you go into business, when you're going to whatever it is that you go into, there's always a plan. And you need to have a plan in terms of when to get back your initial investment. If you don't do that, then I mean, it helps with your planning, right? A take profit order is often combined with a stop loss, and traders will understand this very well. Where the trader caps their downside by setting an order at a price where they want to exit the trade for a loss. So there are benefits and pros and cons to taking profits, when and how to take profits, and this goes over all of that. So that's that. I'm going to pause there for today. Ethereum, we can look at the chart for Ethereum there as well. What are we seeing? Ethereum is currently at 3,693. All-time high was roughly 44,800, and that's what we are seeing there for today. So that's that here for today, people. I'm gonna cut off the live stream now, and I'm gonna stop the recording, and I'm only gonna be on Zoom. So let me go ahead and start the recording. So that was Mastermind number 78, and we went over getting started. So be an Indian giver in terms of rich dad, poor dad. We went over that. So be an Indian giver, and there was something else in there. Let me quote the title from the chapter here, and the power of getting something for free. So get back your initial investment as soon as possible. Practice like a sophisticated investor, right? Kiyosaki invests in 10 different things, invest what he's willing to lose, hits home runs on 2 or 3 of them, and it works out great. Land transfer tax we went over in real estate. What exactly that is, budgeting for that in terms of your initial investment, as well as that there's a different rate for each province and location, depending on where it is that you are. From the cryptocurrency standpoint, big winners over the last 7 days, Athena, as well as Nervous Network, and Bitcoin halving is in 10 days. Terminologies we went over, taking profits in cryptocurrency, what exactly that is, how to do that, pros and cons, and there's that. So for more information, feel free to reach out. And I'm going to cut off the live stream here now. So thanks for joining us there, everybody. Thanks for watching. See you again in 7 days. So we're going to go on Zoom now. I had a great meeting recently. Lots of different investment opportunities on the horizon from different standpoints in terms of not just different asset classes, I should say, and some institutional investments, and love to hear the sound of that. Love safe, love the ones that provide cash flow. We love the cash flow. There are different kinds of things. Real estate is a kind of slower moving vehicle. You need cash flow in order to fund your operations, right? And then you have your higher risk kind of stuff in terms of cryptocurrency. So I had a great meeting there with a business partner, and lots of different stuff there on the horizon. Currently, what do we have? Always having real estate deals available. If you're interested in that, feel free to reach out. Canada is transitioning to a renter's economy, and when you own, you're going to be likely going to be winning if you make the smart decisions, right? So I've partnered with different people in the industry in terms of making excellent investments in terms of real estate, and that's going to continue to happen. That's long term. So there's that for wealth building. Then there's the cash flow, and then there's your higher risk kind of stuff like cryptocurrency. And then we also have private equity. All these opportunities are there and available. So these are things I talk about publicly. However, on a meeting after I get to know you, if there's synergy, then we can potentially work together on different things. So take care. Let me stop the recording. Stop live stream first. And now let me stop the recording. And